Welcome to Anchorage's Tech Trader panel. I'm Bennington from Real Vision. I'll be moderating today. We're going to go around the horn and have everyone introduce ourselves, starting with you, Yuriy, please.
Yeah, how's everybody doing tonight? My name is Yuriy. I am the head of brokerage over here at Anchorage. And my background is pretty much been in trading for quite a little bit. Before I joined crypto, I was at Goldman Sachs for about 10 years on the asset management side, most recently as a fixed income trader assigned to the money markets portfolio management group. I joined the crypto world just in early 2018, joined Galois Capital, which is a quantitative crypto fund, and was there for about a year and a half. And then after that is when I came to Anchorage to help build out the brokerage unit.
Hugo, how about you?
Yeah, so first, thanks for having me. So my name is Hugo. I'm the CEO and co-founder of LGO. And so LGO is one of the largest institutional focused exchange in the cryptocurrency space. So we're based between the US and France, regulated in France. We have something like 60 institutional clients that have been trading on that platform for the last 3 years. And before that, I was a portfolio manager at BitSpread, which was one of the largest cryptocurrency hedge fund before the 2017 bubble.
Yeah. And Chad.
Hi, thanks for having me. Chad Steinglass, I'm head of trading at Crosstower. Before crypto, I was in the traditional asset space trading electronic options. So I've been in market making and trading for quite some time. Crosstower operates an exchange in the US and in Bermuda. We're relatively new on the scene, just launched our Bermuda exchange. We are really focused on bringing kind of the traditional asset DNA to crypto. Yeah, we're happy to be here.
Great. So let's start with the big picture. What's the current state of play right now in institutional trading? Where do we think we are? Big picture, 50,000 foot overview. Yuriy, back to you.
Yeah, thanks, Ash. You know, so much has changed since I came into crypto just a short 2.5 years ago, which is kind of a much longer time in crypto years. I remember when I first started, we traded primarily through chat rooms. And I remember this is back when we even used WhatsApp or Skype or things like that. Now, a lot of what we offer here at Anchorage is through programmatic systems, RFQs that route to different desks, to different exchanges. You can do that through a GUI, you can do that through an API, and there's just a lot more programmatic connectivity across the different exchanges and OTCs out there. So a lot less manual typing, phone calls, things like that, unless a trade is very complicated and, will take a long time to do, like something illiquid. The normal trading is very programmatic, and I think it's going to get even more that way as time goes on.
Yeah. Chad and Hugo, your thoughts on where we are right now, big picture?
Well, I think the biggest development that we're kind of seeing in real time now is it seems like every week there's a new big institution that's announcing a dive into crypto. And, whether that's Square a couple of weeks ago, PayPal just recently, we're seeing finally this real momentum shifting where large institutions are saying crypto is going to be a real thing. We're comfortable with it, specifically Bitcoin, at least for now. And that is changing the landscape. And I think we're going to see more of that. And, in terms of who's going to be playing in this space. And it's going to really help, the crypto industry to kind of see its potential. So it's a wonderful thing.
Yeah, and of course, MicroStrategy being the first to kick off the treasury function of Bitcoin. Hugo, how about you? What are your thoughts on where we are big picture right now?
Yeah, so one thing which I like to say is that, when I started in this space, a lot of people were talking about institutional money and institutional investors buying into crypto. But, back then it was like the Loch Ness Monster, right? Everybody talks about it, everybody thinks they've seen it, but no one has actually, witnessed it. So that was back then in 2016, something like that. And right now, to Chad's point, I think we're definitely in a completely different world. And I don't know if it's because of the the current broader monetary and economic context, but there's more and more hedge funds that are getting interested in that. You have, let's say, retail institutions like PayPal, Revolut that are that have been getting into the space, that are getting into the space. So I think in terms of interest, we're definitely it's definitely growing, and we're seeing more and more institutional clients getting into the space. And the good thing is that the space has been preparing for this for now, 4 or 5 years. So the tools are here, and the institutional players are coming.
Yeah. For me, one of the most intriguing aspects of this space is how crypto has become this mashup of computer science folks on the one hand and traditional finance people on the other. So you have computer science and finance sort of mixing and matching, and it creates such a fascinating and innovative context for the development of the space. I'm curious, where do you guys all think we are right now in terms of bringing in people from the traditional capital markets finance space into crypto?
I can start with, unless you want to go for it, Chad.
I'll take maybe just the first part of this one, since that's really what we're doing at Crosstower. There's a lot of need for the technology part, and that was a very, very important part of the innovation. But I think that as this has matured, and now we're going on 12 years since the launch of Bitcoin, and part of the maturation of the market means that in order for everyone to be comfortable with it, in order for this to become widely adopted and kind of mainstream, you do need this influx of traditional finance. We've been operating markets in the U.S. and everywhere, stock markets and currency markets for a long time, and we kind of know how it works. And I think it's a really good thing that there's a lot of traditional finance coming into crypto, and that's part of what is helping it to become really acceptable to institutions.
Yeah.
Yeah, and I think that's what's fascinating in the space. It's a space that is both very grassroots, right? Coming from Bitcoin maximalists that were thinking of Bitcoin as a currency to which was permissionless, uncensorable, and to be used with no permission, which is a very strong statement, and with much more of a developer, software engineer background. And on the other hand, right now, what you have is that a lot of traditional finance people that are here because you cannot reinvent from scratch a market infrastructure. But it's that the thing which is really interesting about this space is that these two types of people, which have very different background, when you think about it, it's almost opposite backgrounds, work together in the space. And so one thing that we've seen this summer, this kind of DeFi bubble, right, with new protocols coming, being created and new ways to exchange and to create value that are created by this kind of grassroots community. I think that's fascinating, and we're right in the middle of the value of this space, which is at the intersection of the innovative software, computer science world and the traditional financial world.
Yeah, it's a fascinating time to be here. Yuriy, what are your thoughts on this?
Yeah, definitely agree with Hugo and Chad. I think what I would add here is that traditionally, traders were really separated into two buckets, right? So you have kind of fundamental analysts, people that look at different parts of companies, and then there would be like quants, which usually just have specific quantitative strategies. There's the famous kind of saying goes that Rentec folks don't even know finance; they just literally just do nothing but quant work on whatever they're looking at, right? And then maybe about 3 years ago, I started hearing the term quantamental, right? It's like all new kind of SecDev analysts that would come into Goldman, they were really looking at folks that really understand finance, but also have like a very good quantitative side, so they can also be data analysts as well. And I think, in crypto, you see this right away, like where both of these kind of skill sets really come together to start developing kind of theses on how to properly invest assets and trade the markets, right? Yeah, that's what I would say there.
Yeah, Yuri, it's funny. To your point, I can remember a time where people bragged about not knowing anything about finance. Finance? Why do I need to know about finance? I have a PhD in physics.
Yeah, exactly. And then you have the other side of the coin where the finance guys are like, well, why would I need to know any of this quant or computer science stuff where I have a team of analysts, right? And now here we are, kind of where if you don't have at least some sort of base in both, you maybe you're not quite as valuable as a person who understands both sides of the coin.
Yeah, and that's, I think what we've all been talking about is how intriguing this is, that this period of mashing up of everything. And yet at the same time, there are still so many distinct tribes in the crypto world itself. You have the people who came from finance backgrounds. You have the people who came from computer science backgrounds. Chad was saying something earlier about Bitcoin and crypto. You have people who are very passionate about their definition of their space. And I'm a Bitcoin maximalist, and oh no, I'm a Bitcoin or a crypto experimentalist. I don't know what the right term is. Bitcoin minimalist doesn't seem to be quite the term of art that we should be using. I'm kind of curious how you guys think about that broader world and how that plays into your worldview and what you're doing day to day in your own shops.
Yeah, maybe I'll start this one. One of my favorite pieces that I like to read on a weekly basis comes from ARCA, Jeff Dorman's fund,
Yeah.
and they always talk a lot about how basically there's all sorts of Bitcoin investments. There's like so many reasons different people have for buying Bitcoin, right? So it's really hard to predict where it's going because there's idiosyncratic crypto reasons, there's macro reasons, fundamental reasons are starting to kind of pop up as people develop models, and so on and so forth. So it's really one of the first asset classes where you have a lot of different theses that are kind of overplaying each other, and you have to kind of assign weights to why folks are investing in Bitcoin to really try to just take a look at where it's really going, what the price targets might be, and things like that. So I think that's kind of a good way to describe it, which is kind of unique to Bitcoin and crypto itself.
Yeah. Any other thoughts on this, the Bitcoin maximalist versus experimentalist position?
Well, one thing I would touch on is, Hugo touched on DeFi a little bit, and I imagine we'll probably talk a little bit more about that as the afternoon goes on. But specifically, talking about institutional trading and institutional investing, I think that you're absolutely right to say that there's kind of these two different schools of thoughts. And the way that I see it is that institutions, in order for them to be comfortable in the asset class, they really need to have something that's mature, that they can understand well, that they're comfortable, not just with the risk of like, am I going to make or lose money, but also reputational risk, regulatory risk, compliance risk, all of these things. And in order for them to kind of jump into that, they need a mature product. And right now, Bitcoin is that product. And so I kind of see Bitcoin being the place where institutions can start to join this, and the altcoins, and then even to a much larger extent, the DeFi world is kind of this little like sandbox experimental world. And I think it'll probably be a little while before major institutions would be comfortable kind of dabbling in that direction.
Yeah, I was actually planning on jumping into decentralized finance next, but really quickly, in talking about the maturation process, where are the gaps right now? What are the things that are still yet to be solved, or on their way to being solved, or that are being smoothed over to make the space really attractive to institutional investors and institutional traders? Maybe Yuriy on this.
Yeah. So, in my opinion, I think from the kind of operations side of things, crypto does just about everything more or less better than kind of the Wall Street model, right? But the one thing that I think is really missing is just immediate kind of execution on exchanges. And what I mean by that is, like, for example, if I have a client come to me and say, all right, well, I want to run this algo on this exchange, and I want you to start it like immediately, right? At the end of the day, I have to go out and I have to basically pre-fund every exchange that I'm connected to, and then trade on that. And as we know, in the traditional markets, you basically trade on the exchanges, and then all the settlement kind of happens a little bit afterwards. So, and what Anchorage is trying to do is we are trying to work with exchanges, to see what kind of solutions there are to allow trading with post-trade settlement. Now, OTC desks allow this at the moment, but there's a lot of reasons why certain trades, I think, are good to execute on OTC, but other trades are much more advantageous to execute on exchanges. And I think if we can solve this kind of pre-funding post-trade settlement issue, which I definitely think we'll see over the next probably a year or two, I think that's really the biggest part that I think from a tech side that could mature in the space.
Yuriy, what are the main outstanding issues there to solve that?
Well, one of them is kind of credit risk, right? So, if I'm gonna, trade an exchange and not settle, like how much can I trade, right? Like before the exchange kind of puts a stop on it. How often should I settle and make that on-chain transaction? Should it be weekly? Should it be daily? Should it be continuous? If we get there, we don't know. I think these problems are still being figured out. So that's probably the main thing. But the other thing too is, like, as we see, as Chad mentioned, some of these bigger companies, publicly listed companies coming into the space, they have to hold their assets in a qualified custodian, right? So if custodians can partner further with exchanges, I think we could see this process really speeding up, right? Because there is mechanisms out there that we're working on, for example, that include exchanges. Like, for example, if I sell Bitcoin on them, before settlement, the exchange has a way to kind of lock those assets, so there's no double spending or transferring out issues like that. So I think once these things are ironed out, we'll definitely get closer to the post-trade settlement that I mentioned.
Yeah, Hugo, what are your thoughts on that?
I mean, I pretty much agree with everything that Yuriy said. I would just phrase it in a little bit of a different way. Like, to me, it's a matter of user experience, right? If you're trading on traditional capital markets, you're, as you mentioned, you mentioned to certain things, post-trade settlement. You mentioned to a certain type of execution, which today you don't really find in the the current cryptocurrency space, and for a whole variety of reasons. And this user experience, there's a lot of ways to solve that. I think the best one is to remove all the complexity which is linked to the blockchain. Like entering the blockchain, an on-chain transaction, securing wallet addresses, securing private keys as well. If you remove all this complexity for traditional players, then it's much easier for anyone to transact. And so it probably comes with custodians being more involved with those institutions, with exchanges. So, like, like a transfer or trade is actually a database entry within the custodian and not like an on-chain transaction on the blockchain. And so I think it all boils down to us as a space finding ways to make our very complex world much simpler and much more adapted to the way current traditional actors from non-crypto asset class actually trade.
Yeah. Chad, thoughts on that? Gaps in the space?
Yeah, both of you guys kind of nail on the head in a lot of things. And Hugo, I like what you're saying as far as focusing on the user experience. The way that I think about it is, from the institutional world, you've got institutional investors, but then institutional traders, market makers, active traders. And for those guys, institutional trading kind of goes hand in hand with retail trading. If you're a market maker and you're trying to provide liquidity and make money, you want to be interacting with retail order flow. And in order for retail order flow to be nice and easy from a user experience as well, like, it would be awesome for me to be able to not worry about which exchange I have my account on, be able to use an algorithm or a smart router, which will go and take the liquidity where it's best, where it's lowest fees. There's all of these things that, like, we kind of take for granted. And if you go and place a stock order, you kind of take for granted that this all works. And there's the SEC and the NASD is out there looking out for you. They're making sure that Reg NMS is being followed and you're getting best execution. We don't really have any of that in the crypto world yet. And I think that we kind of need to come up with our solutions to kind of solve the analog of all of those problems in crypto in order to be able to make it be this, easy thing where, where retail orders are just coming in and getting filled and they're not getting ripped off. And then, then everyone's trading and everyone's happy. And that's kind of how we move forward, I think.
Yeah, no Reg NMS, no NBBO, no oversight. The inter-exchange deltas have started to flatten considerably over the last couple of years, but we're still not where you are, trading big cap stocks in the U.S. by a wide margin. That anticipates the flip side of that question, the gaps. What is your vision of what the future looks like? And by future, I mean relatively short term. Where do you think we are in a year? Where do you think we are in 3 years? Yuriy.
Yeah, so somebody asked me kind of a similar question a little bit earlier. I had a meeting with, and the way I kind of think about it is I want to allude to one of the podcasts that Michael Saylor was on, and I think it was Pomp. He was asking him, well, how did you come to this decision to kind of invest all this money, right? And then he kind of goes in this whole thing where, like, he describes this 8-month process, right? Where, they were talking to lawyers, their compliance people, then their board, and it was this whole thing before they really made, the decision to invest a lot of their treasury in Bitcoin. Now, they did do quite a bit of it. Now, even though Square, percentage-wise, had a smaller investment, probably the same sort of process went on there. So I think what's going on right now is a lot of these talks are happening for large companies that have basically a large balance sheet of cash to manage. And what I think is going to happen in the next year is a lot of these decisions will complete this, quote unquote, 8-month process. Where they will make a decision to perhaps invest in Bitcoin, hopefully more companies than less. And then we're going to kind of see maybe one of these a month, then a couple a month, then a few every week. And I think 2 years from now, this is going to be pretty normal, I think, and I hope, for companies to kind of do more allocations to Bitcoin of their cash diversification strategy.
Yeah. One of my favorite Michael Saylerisms over the last several months is that John D. Rockefeller was running a tech company in Standard Oil, essentially that all business is about innovation, all the business is about technology. There's nothing new under the sun. We're all constantly pushing forward, looking for that innovative edge, looking to improve, to lower cost, to improve quality of service, and to do all of those things. Hugo, to pick up on that, what's your vision of what the future may look like, and how are you thinking innovation is going to change the space, especially with regard to the institutional trader?
Yeah, so talking about innovation, I think you're perfectly on point, and what we've seen again with DeFi and the kind of explosion that we've seen in the past few months is something that is, I think, going to profoundly impact the way capital markets work, not just in Bitcoin but in general. You look at the innovation of what's called an automated market maker, so Uniswap, which is the silver bullet that solves at the same time the problem of liquidity on non-liquid assets and idle capital for people that have non-liquid assets. It's something which can be used for any asset, not just cryptocurrencies, not just Bitcoin. So I think what will happen, it's probably not going to be a 1 year or 3 year thing, but probably in 5 to 10 years, we'll see this implementation of really what is blockchain technology to a whole breadth of assets, starting with cryptocurrencies. I think it's CZ from Binance that said that his centralized exchange, which works kind of the traditional way, was going to be disrupted or was going to be complemented by decentralized features. And I think that's very true. And I think that's something that we're going to see not only in the cryptocurrency space, but also in the more traditional space. Now, in the shorter term, what I think we'll see, and I think we'll see more and more interest, but on the derivatives and the futures market, because that's the instrument which is easier to get for institutional clients.
Yeah, Hugo, I must compliment you. You've brilliantly anticipated the grand finale, which was going to be the conversation about DeFi. I feel like we've been in the summer of DeFi, the summer of decentralization, DEXs. First of all, before we take anything for granted, who wants to jump in and give a good, simple definition of what DeFi is, what decentralization of exchanges really means, and why it's so significant and such a potential shift in the space.
I can take this one. So decentralized finance, essentially, it's all about replacing the logic behind a financial process with lines of code. And these lines of codes, you put them in a smart contract that can run autonomously. So essentially, you're at the same time automating the processes that are underlying the capital markets, but you're also running them autonomously on a blockchain in a permissionless, uncensorable fashion. So that means that from a very high level perspective, all the services that you can get with a financial institution, the ability to trade, the ability to borrow, the ability to lend, and to invest as well. Well, these services, they can be summed up in lines of codes, and they can be accessed by anyone that has an internet connection and a blockchain wallet. So that's extremely powerful, because you're transforming the financial industry into something which is more akin to like the internet or like to software. So completely automated, completely autonomous. And so that's the big innovation of DeFi. And
right.
Yeah, that's basically decentralized finance.
You know, some might say that DeFi, decentralization, decentralized exchanges, may be the biggest innovation to happen in the space since blockchain itself. It's a major shift in the way we view things. Yuriy, what are your thoughts about that?
Yeah, so I think what I can say is that what I think describes like something like a Uniswap is, I think what somebody mentioned earlier, is the automated market making, right? And the use of bonding curves and things like that, right? Which is supposedly the new frontier of market making. I would actually argue against that a little bit, saying that if you know exactly what the automated market maker is supposed to do when they're receiving volume a certain direction or whatnot, the traditional market makers can make decisions on the fly and kind of start picking off like orders, because exactly how the algo is going to run, exactly what's going to happen, assuming your assumptions and the volume and the directional of the flow is correct. So the thing about traditional market makers is, you can adjust your parameters on the fly based on kind of what you're seeing in the markets. Whereas, the automated market maker with its bonding curve will always kind of do what it's supposed to do according to the code. So I would say that, look, the DeFi platforms I think are great. I think transparency of the DeFi platforms is probably one of the top things that we've seen. There's been kind of a few issues with some of the Sushi Swap and some of the other things, and they were discovered like right away, just because you could kind of see what's happening in the blockchain. But I do think that the traditional market makers are not necessarily going to be wiped out by automated market makers, in my opinion.
Chad, jump in on DeFi. What are your thoughts?
Yuriy, I really like that you brought up the market making algo. I started my career with Susquehanna as an option market maker on the floor of the CBOE, and then moved up to electronic trading, remote market making. And yeah, as an option market maker, like if I was just going off an algo and I wasn't making decisions and evaluating what my risks were, and if I thought a customer was being too aggressive and I needed to get out of the way, like I would have gotten run over all the time. And I got run over sometimes even as it was. So I think I absolutely agree with that. I think that the way that I see DeFi in general right now is it's a cool experiment. It is potentially, it's very innovative. It could be, potentially adopted, at some point in time in the future. Right now, the way that I see it is it's like, if I was recommending an institution, do you get into this or not get into this? I'd say stay far away, let this work itself out, let all the problems be found and solved. One of the things that is very important for a currency, crypto or otherwise, is that we make sure that there aren't any bad actors. There's no money laundering. There's in order for something to be a mainstream currency, in order for institutions to be comfortable being involved and and not feeling like they're taking some kind of risk that they don't understand, or that that could be a big reputational risk or operational risk. They need to be super comfortable with the entire ecosystem of the product. And so the way I think of DeFi in general is it's kind of like the R&D lab, the skunk works, as it were. And it's cool, and maybe something really cool will come out of it. But I see that as entirely separate from the current, traditional crypto market, at least from the viewpoint of an institution.
Yeah. It's so interesting. This gets us back to what we were talking about at the very beginning of the conversation, which is the mashup between the tech world and the traditional finance world. Those of us who came of age in banks had this drilled into our heads when we were in our 20s, right? You got sat down in a room for 7 hours and lectured to about AML, KYC, OFAC list. This is something that was so deeply ingrained in us coming up, and it's something that probably people who are looking at this as a green field, as a blank sheet of paper, maybe didn't think about at the same level, because there hasn't been that much background or context for it. But it is really interesting. I mean, it's hard to look at the DeFi space and not find it intriguing, though there is that question, is it ready for prime time? Yuriy, thoughts about that?
Yeah, I think the quick answer is probably not at its current state, right? One of the things that I think everybody here remembers is that the Ethereum gas fees went up for a couple of weeks, to some exorbitant amount, right? And then you kind of had a lot of chatter on Twitter about what other smart contracts are available to run some of these DeFi platforms. Can we do something other than Ethereum? But then you go to DeFi Pulse and you see that just about every platform out there runs on it, right? And then there's Ethereum 2.0 is supposed to come out, but that's probably a little bit uncertain. So look, I think once some of this throughput kind of starts scaling, maybe at that point we can start talking about some of the stuff being used a little bit more mainstream. But I think that until that point, like Chad said, it is kind of a bit of a sandbox.
Yeah. Talking of which, we've had this rich conversation. Final thoughts about where we land and what your outlook is as you look to the future. Let's go back to you, Chad.
Well, one of the things that I'm actually most excited about is the stuff that is happening literally right now with the PayPal announcement. I think that the kind of the introduction of saying, all right, you're going to be able to use Bitcoin to pay for things, which was, kind of the idea maybe from the start, but there was a lot of, there's a lot of friction in doing that. You had to have a vendor that would accept it, and the transaction costs were, transactions were a little slow and they were costly. So to have a company like PayPal pushing this innovative approach to say hey, we're just going to let you do this and it's going to be seamless, is awesome, because it just really widens the base. It expands the base of people who are going to be like, hey, I might as well, if I can buy some Bitcoin in my PayPal wallet, I might as well. And there's going to be a lot of technology that needs to happen behind the scenes in order for that to work, right? So PayPal has to partner with an exchange, or hopefully several exchanges, if they want to be, making sure that they're getting the best price for their customer. And those are all little transactions that can happen on exchange. They don't need to happen on the chain. And that makes them so that they can be fast and cheap. And this is kind of a cool, this is the solution to being able to use Bitcoin to buy things, which I think is great. And so, that is going to be, I think, is going to be a major driver of just this kind of wider mass adoption. And, I think it's going to contribute to, I'm not going to give any investment advice or anything like that, but I think that's going to contribute to price appreciation. Just simply, if you have more and more people that are going to be getting involved, that makes sense. And it's it's going to create a network effect as it just gets more normalized. And I think that's wonderful. That's the thing that I'm kind of most excited about. And I think that at least what I want to be focusing on at Crosstower and what I think like the traditional crypto exchanges and technology providers should be focused on is like, yeah, how do we make sure that we can provide the right infrastructure to be so that we can make all of these little behind the scenes transactions run smoothly, cheaply, not ripping anyone off, make sure we're competing on fees, we're competing on price. And this is all, if we can do that, then, the sky's the limit.
Yeah. 350 million or so users of PayPal. My mom has a PayPal account. I'm pretty sure she's not on Uniswap, but sometimes she surprises me. Hugo, final thoughts.
Yeah, I would say, like being in the space for a few years now, I've never really doubted the fact that Bitcoin was going to be eventually something widespread, and that like blockchain technology would be used for a whole lot of things, DeFi, but also a lot of stuff. But like now more than ever, I'm confident in the outlook of Bitcoin and blockchain. I mean, you look, 3 years ago when we started LGO, it was very rare that people actually knew what Bitcoin was and what cryptocurrencies were. It was in 2017 before the bubble. And like today, anybody knows about that. Anybody knows about the technology, and a lot of people know the actual price of Bitcoin. So that's, I think we've done a lot of things. And today we're at, I think at the time where first there's a quite good adoption of cryptocurrencies generally in a lot of countries. You take Turkey, you take Colombia, for instance. The proportion of the population there that owns Bitcoin is over 20%, which is huge when you think about it. It's not the case for any country, but like for some where usually it's linked with monetary issues. But like in some countries you have a lot of adoption. And today, with the different monetary policies that we see in the US, in Europe, a bit everywhere around the world, I think there's more and more this feeling of, okay, we need something else that can be a hedge for future inflation, or that can be a hedge for pretty much anything. And that's uncorrelated with the way central banks act. And so, that's what we see today. And I'm very, very confident about Bitcoin being more and more used, and blockchain technology being more and more implemented in things like DeFi.
Yeah. Yuriy, you get the last word. Final thoughts.
Yeah. So I'll take a little bit of a different approach to this question. So, if you've traded kind of on an institutional trading desk, in the traditional markets, you have this whole concept of kind of like fails, right? So what that basically means is like, on the settlement cycle, someone's supposed to deliver something to you and then they don't deliver. And it's usually because the counterparty to them doesn't deliver to them, and so on. You have this like chain of fails, in the traditional markets, big banks have entire teams that focus on fails and claims and things like that. Just because the SWIFT system, which I think was kind of developed in the 70s, 80s, people still use faxes and things like that. I think this is probably one of the biggest problems the blockchain industry solves. And I think once the big institutions kind of see that how efficient all their post-trade activities can really be, I think that's really what's going to drive kind of like a lot of the adoption of the cost savings and the efficiencies that banks and large funds can achieve just through trading on these new platforms with the blockchain technology.
Yeah, and boy, did we ever learn about counterparty risk in 2007, 2008.
That's right.
Intriguing conversation, everyone. I still feel we're just at the beginning. Chad, Hugo, Yuriy, thanks for joining us. Everyone at home, thanks for joining us.
Yeah, thank you, Ash.
Thank you, Ash.
Thank you very much.